Hello, my name is Charlie Morris and welcome to Atlas Pulse TV. Today in the studio I'm joined by Danny Masters, who's the chairman and founder of Global Advisors. Welcome, Danny.
Thank you, Charlie. Nice to be here.
So for a living, I gather you have something to do with Bitcoin, is that right?
It's a passion.
It's a passion. And what got you started? Why do you believe in Bitcoin so much?
As a career-long commodities trader in oil and gas and precious metals, I saw a really long cycle in the commodities space that really came to an end in 2010. Prices for commodities have gone up 1,000% over the decade or so prior to that, and the market had reached an appropriate level where I believed that supply and demand were going to be in a closer balance for a long time. So I was looking for something new, and the volatility of Bitcoin was what caught my attention, and then the interesting nature of the technical structure around it, the blockchain technology as it's well known as now, and also the very nature of money itself comes into question, and those are the things that interested me.
So back in 2011 I discovered Bitcoin, although I did nothing about it. A hippie friend of mine who's also an economist by the name of Thomas Patterson said, you have to look at this new electronic gold called Bitcoin. And of course I dismissed it because I assumed you could just cut and paste Bitcoins. You can't store, you can't store code on your computer and call that money. But as you say, the blockchain was the big game changer, wasn't it? And it wasn't until 2013 that I certainly discovered blockchain, and it was a life-changing moment. Mm. And the same happened for you.
Yes, I think a globally distributed, time-stamped, synchronous peer-to-peer ledger is a strange concept for people. This was the genius of Satoshi Nakamoto, the founder of Bitcoin. He enabled the trustless transaction of a financial trade across the internet between two people who don't know or trust each other. And that idea is what's powered the whole blockchain revolution.
So in a nutshell, it's just the exchange of value across the internet, isn't it? And a whole new asset class has been born, hasn't it?
I think the term transactional layer of the internet is a very good one. The internet's not designed to do financial transactions. It's designed to send data. So you need to do something extra in order to secure financial transactions. Obviously, we do financial transactions with our credit cards on the internet, and that's very common. But that's not a native deployment of a payment, and a Bitcoin transaction is.
So we've just taken the old school banking system, called it PayPal, made it secure on the internet, and that's a kind of interim stage for what lies ahead, isn't it?
I'd call it lipstick on a pig, to be perfectly honest. I've always thought that what was going to happen was that rather than there being some ideological struggle, battle, and subsequent victory between legacy fiat currency systems and Bitcoin, that what would happen is we would see a very diverse payments ecosystem develop, which includes dollars, yen, sterling, and pounds, and there's other currencies, the major currencies that we've all known and loved, but would also include upgrades on that system. That's your PayPal and your Apple Pay. Would also include Bitcoin, and would also include a number of other digital payment mechanisms, giving you a very broad ecosystem where, analogous to your phone, where you may have 6 travel apps, you may have 6 payment apps, and you may have apps that actually work in the background where you're making payments you don't even know you're making, or not consciously acting.
But of authorised in some way.
Authorising them, yeah.
No, sure.
So yeah, I think that's the vision, and the thesis behind Bitcoin is nothing to do with does it replace the dollar. That's always a very contentious debate. The question is how much of the M1 money supply, or the payments network, or the value of gold, or the dark web, or the black market, how much penetration and what share does Bitcoin end up with? And because it is so small in relation to those other components, that's what gives it a lot of upside.
Because right now only $1 billion a day changes hands, which is obviously up from 0 in 2009 and 10 million in 2011 and so on. So and as the utility of the network has grown, so the price has grown very rapidly as well. We're talking $4,000 Bitcoin today, aren't we? And on $1 billion transaction. And can you imagine $1 million Bitcoin? Is it possible?
I made the price forecast of the levels we're currently at, probably somewhat fortunately a couple of years ago. I do see a lot of very high price forecasts for Bitcoin. I also see some very low ones. So, I do think that there is significant more upside, and I take your point and I concur that the transactional volume on the blockchain on a day-to-day basis is strongly correlated to the value. We can see that across multiple digital asset networks. What I think is really important is in recent months, and I think this has been the real-time catalyst, a mechanism by which we can scale the Bitcoin network, the blockchain, has sort of come into formation. This was a very contentious issue for a long time, held the market back. We've just doubled the capacity of the blockchain in recent days. But more importantly, I believe that that's laid a framework by which we can make subsequent upgrades as well. If you can upgrade the blockchain, which was the choke point, then you can do a lot more transactions, and I think that's what we'll see.
Because essentially, before the scaling happened, because some viewers may not understand this, but basically the Bitcoin network had reached capacity. It was a bit like having a restaurant with a queue outside and not enough meals to feed them all, but there was huge demand to use the network. And now we've had the size of the network, it can continue to grow.
That's correct. Bitcoin's capacity to print individual transactions is surprisingly limited. The 1 megabyte block size that each block that's created every 10 minutes roughly across the blockchain translates into about 7 transactions a second. Now, the Visa network can do thousands of transactions a second. With this recent upgrade, we can probably now do 14 or 20 transactions a second. And so that's where we are in terms of the relative, usability of these networks. But the path forward for Bitcoin, I think now is open to see that scaling.
Now, we were talking about currencies earlier, and there's obviously this terrible term, cryptocurrency, which I think is misleading, and digital asset is probably a better way to describe this space, because this is a new asset class. There's no correlation with currency. There's no correlation with commodity, with equities, with property, or with the bond market. And that makes it hugely beneficial to portfolio managers today. Now, your company, Global Advisors, has Bitcoin products, doesn't it?
Yes, we do.
Could you tell me a little bit about those?
Yes. To your first point, I've always been very mindful of correlation. People tend to focus on performance, but correlation is hugely important. If you're creating an efficient frontier of assets in a sort of Markowitz portfolio, your goal is to find the highest risk-adjusted return you can find, and correlation plays a very strong part in that. So not only has Bitcoin been one of the most prolifically performing assets of all kind, it has done it with no correlation to any other asset class, and that makes it very special. The market, I don't think the market has been mature enough to really think about portfolio allocation and including digital assets in it to date. But that is now happening, and we're seeing institutional people start to look at it, and when they plug the 5-year performance of Bitcoin into a portfolio, it has some pretty powerful positive effects. Our firm, going on to Global Advisors, we have a growing suite of products. We have our flagship fund, Gabby, which is a actively managed Bitcoin-only fund. We recently launched CoinShares Fund 1 LP, which is a private fund, a closed-ended fund, investing in protocol coins such as Ethereum.
So that's the rest of the space, because the space is worth $130 billion. Yeah. Bitcoin's a little over half of that,
right, and
the rest of it's a whole lot of exciting new stuff.
That's right, and that's what the second fund focuses on, very much a very frontier market. So that's the second current leg of the strategy, and the third is we have 2 NASDAQ-listed Bitcoin tracking certificates that mirror the price of Bitcoin almost perfectly, and they've proved hugely popular. And the reason is that they're so easily accessible. Bitcoin markets are not easily accessible to people, at least in the sense that they...
For Danny, for your tracker products, I've got to go to Sweden for some reason. Why is that?
The product is listed on the Swedish NASDAQ, NASDAQ OMX, and NASDAQ, and particularly in Scandinavia, have been the most proactive, regulated exchange for digital assets. So we're going to see Bitcoin and other digital asset products across other exchanges, but Sweden just had a first move in that space. That being said, our product is accessible, for example, on an electronic platform like Interactive Brokers. Interactive Brokers is available in 179 countries around the world. Anyone with that platform can access that NASDAQ market and buy that tracker.
So the Swedes really have been, or the Scandinavians in general, always pretty adventurous, aren't they, at these sorts of things? So well done to them. But I think what's changed is, 3 years ago you launched your fund. You struggled to raise money for a long time.
Yep.
Now it's very hard to get hold of you because you're the most popular, busiest man in the world. You told me you haven't been sleeping for good reasons because business is so good. So, but this is now because institutional money is coming into the space. Bitcoin started off with computer people who saw a sort of geeky cryptographic project. Then the naughty people, the bad actors, as we call them, or the libertarians got excited. Then the speculators like us got involved, and now the institutional money is coming. Tell me, what's the difference in the conversation you're having with a typical fund manager today compared to the conversation you're having 3 years ago?
In some cases, what is surprising, and to some of the larger institutions that are now engaging with us, there is no longer a conversation about what is Bitcoin.
So they're no longer asking you, what is it, how does it work, why is it?
What is it backed by?
No.
Those kind of questions.
So that question's gone.
They're gone. At the moment, the engagements we're having are primarily in the structure of the products we have, the regulatory framework in which we operate these various products, the saleability of those products into different jurisdictions, obviously due diligence on us and our firm, considerations about liquidity. So it's really an execution style inquiry, not a research style inquiry. And that's been very surprising to me.
So they actually know they want it.
Yes, and for somebody that has had a passion for this asset class for a long time and had innumerable conversations, rebuffed by it's a Ponzi scheme, it's not backed by anything, it's surprising to me that those conversations have simply vanished.
And it can't be a Ponzi scheme because a Ponzi scheme is a fraud, and this is not a fraud, it's a beautiful piece of technology. And it can't be a pyramid scheme because in a pyramid scheme, some ladders, if you like, or networks are very valuable and others are worthless. And in this case, all Bitcoins are worth the same. So therefore, it can't be a pyramid scheme. Maybe it's just a bit of a mania. But manias are good,
well,
right?
It's interesting you should say that. A friend of mine sent me an article about manias, and it focused on the California gold rush and the tulip mania. And what was interesting in both cases was they spawned, respectively, Levi jeans and very enduring brands, possibly the town of San Francisco as well. And it's arguable the Netherlands wouldn't exist had it not been for the tulip bubble. So, I think obviously...
What you're saying is bubbles are good, and they are.
Well, they're creative processes.
Absolutely.
And that's what we're seeing. If you think about the remarkable use cases we found for the internet, things like Uber, Airbnb, Facebook, and so on, things that weren't conceivable even when the internet was reasonably well adopted, genius ideas that enabled new use cases using this platform, the internet. And I think now what we're seeing, the unknown is what are the genius use cases for digital assets, and there are some really interesting possibilities.
The 10-year vision's a tough one, though, isn't it? If you say, what's the internet like in 2027 versus with or without this technology, what is the difference? There must be a difference, but have you any good visions for that or ideas of where we go?
I think we're going to see certainly directly in the financial space. Our vision now has broadened out from the products that we mentioned and the idea we had about Bitcoin as a commodity to the concept of a digital investment bank. And I do think that across many, many areas, the programmable nature of money as represented by Bitcoin, the programmable nature of capital as represented by Ethereum, these are going to throw up some remarkable opportunities going forward, but I don't think anybody really can understand what they are just yet.
No, sure. So I just want to talk about the asset, fundraising. We've obviously touched on the conversations changed. People accept Bitcoin, they get it, it's going up. They haven't got it, they wish they did. And so it's now all about due diligence and all the sort of the sensible conversation. How has your asset journey evolved over the last few years?
Well, my thoughts early on were that given the controversial nature of Bitcoin, as I approached it in 2013, it required a really robust framework. And so we approached our regulators in Jersey, and after 18 months, we got the approval to create what is still the world's first regulated Bitcoin investment fund. So that was kind of a really big deal. And I think going forward, we're going to see we see the Chicago Board of Options, CBOE, just trying to launch their futures contract. We've seen a failed attempt of a Bitcoin ETF in the States, but that may come back. The Chicago Mercantile Exchange have now got their Bitcoin reference rate that they're going to plan a futures contract on as well. It's a dramatic change over those years in terms of how much regulatory freedom there is now to do this stuff.
So the message to the audience is Bitcoin is here to stay, institutional money is coming, and it's a very exciting long-term journey.
Yeah, no, I think so. I think it's, who knows how long this second phase will last. But I do believe that the powering of digital assets is sort of rooted in the capital that comes into it. That's what funds developers, that's what interests retail vendors to adopt different payment technologies. That's what makes corporations start to incorporate digital asset technologies into their day-to-day work. And so yeah, that's kind of the vision for the 10 years forward.
And when do you think your firm's going to cross $1 billion under management?
Well, back to your earlier point, that fund, 18 months in creation, struggled along with 5 million in assets probably for 2 or 3 years. When we got involved in the Swedish market, in the Bitcoin tracker, that jumped up to maybe 20. In the last 6 months, we've passed 250 million, and I'm confident within 12 months we'll be over $1 billion.
Fantastic. Well done.
Thank you.
And when you buy your new boat, when you get to $1 billion of assets, what are you going to call it?
Well, I have to call it the Atlas, Charlie.
Yeah, okay, that'll be fine. So, Danny, thank you very much for joining me, and ladies and gentlemen, thank you very much. Look out for the next episode of Atlas Pulse TV.